Hi guys, and welcome back to Cash Bright, your guide to investing in an ever-increasingly uncertain financial world. AT&T. The question has probably crossed your mind at some point during this year. Should I be buying this stock? Well, AT&T stock has historically been a steady, if not slightly underwhelming performer in the stock market. Now, everything of course radically changed when lockdown struck in March of this year, and AT&T stock price fell from around $38 to a low of $27. Investors were naturally spooked into selling out their positions in AT&T, given the obvious economic effects of lockdown. But the stock has managed to level off at around $30 during early August. So, is it worth buying this stock? Or should investors be staying away? Well, on the positive side, the business is growing, despite the challenging commercial environment posed by the pandemic. The company's wireless segment has seen a modest amount of growth, with an 8% annual increase in customer numbers, and the launch of 5G could boost this further. There's also been recognition in the business that there needs to be more done in terms of its streaming services, and this has prompted the company to hire the ex-boss of Hulu to streamline and simplify its offering to customers. The company is also a very solid stock to own for dividend payments. The stock has in fact always been a well-known conservative investment because the company has increased its dividend payments every year for the past 36 consecutive years. AT&T is a company that clearly wants to keep investors happy. And even with inevitably declining earnings for 2020, I think it's a fair bet that they will not want to break that record going forward. So, these are all good signs for investment. But let's not get carried away here. The company's stock price has not seen the kind of jump experienced by other, quote, tech stocks, and its price has stubbornly fluctuated around $30 since March. So why aren't investors more positive about AT&T? Well, I believe many investors may have been put off by one word: competition. It was recently announced that T-Mobile has now developed a greater customer base than AT&T, and has therefore taken its mantle as the US's second largest wireless provider, behind only Verizon. T-Mobile merged with Sprint back in April, and perhaps it's this that has deflated investors' optimism in the stock. Further, the company badly misjudged the home streaming market, resulting in around a fifth of its subscribers walking away from the company, and in all likelihood, signing up to easier to use platforms such as Netflix. Following AT&T's acquisitions of Time Warner and DirecTV, there is also a concerning level of debt. Many analysts therefore see the stock as following a bearish pattern over the mid to long-term future, and generally advise that even at its current price, this stock is overvalued. So overall, I think this is a stock to watch rather than to buy right now. This stock has a history of underperforming in terms of investor expectations even before the pandemic, and I believe there's a good chance we will see a similar pattern through 2020 and into 2021. If AT&T can sort itself out and re-establish itself in the wireless and streaming markets, there's a good chance for the stock to rally upward. But for now, I would hold fire and watch how the company manages to ride out the prevailing headwinds brought about by increased competition and a depressed economy. Would you buy this stock? Or do you agree with me in watching and waiting? Feel free to discuss in the comments below. Thanks for watching. If you found this video to be helpful, please leave a like and don't forget to hit the subscribe button. And until the next time, stay sharp, stay hungry, and stay cash bright.